East Africa is fast emerging as one of the fastest growth regions in the continent. Moreover, the financial inclusion penetration in the continent is set to push it even higher. Elayne Wangalwa has more.
The financial inclusion landscape in the East African region has undergone significant transformation over the years as a result of the expansion of services provided. This was highlighted during a panel debate on financial inclusion in Nairobi, organized by CNBC Africa in partnership with financial services firm AFB.
East Africa has really been at the cutting edge in terms of driving this, the use of mobile technology in financial services. So we are breaking new ground, if you like, and the regulation has to be responsive in that context to facilitate the innovation, right, while ensuring that the depositors or the borrowers or the users of the service are protected. And I think so far the regulatory authorities have done a very good job. I think our central bank has in particular done a fantastic job of allowing these developments to take place.
Moreover, reports indicate that Kenya has greater access to financial points than its neighbors, largely driven by the convergence of the telecommunication sector.
FinAccess survey is a survey that is carried out to sort of like measure the level of financial inclusion in the region. And for example, the Kenyan survey was first done in 2006, and then 2009, and then 2013. And if I can just draw on the parameter of the Kenyans who are excluded from financial services, whether formal or informal, I think the number that comes out is in 2006, the Kenyans who were excluded were just about 39%. In 2009, it moved down to 31%. And in 2013, which is the latest we have, it was down to 25%.
We've seen rapid evolution. Obviously, the pace varies from country to country because this is a business that largely depends on a substantial ecosystem. Right. And so in markets where either telephone penetration is not as strong as East Africa, or where literacy levels are not as high as in East Africa, it's taking a bit of time. Right. But we're quite encouraged with what we're seeing in some markets like Madagascar, Burkina Faso, Malawi, Ghana. So some markets are picking up at a much faster pace than a lot of others. And we think over the next 2-3 years, there will be at comparable penetration rates as what you find in East Africa.
With an urgent need to expand financial services in the region, industry players are fast-tracking processes to reach the lower-income households and small enterprises.
A lot of progress has been made, but clearly there's still quite a long way to go. And the challenges are numerous. Yes. I think the first challenge that we need to overcome is just creating the awareness of financial products and the value that they add to people's lives, and then building the distribution capability to ensure that those financial services are available and are accessible to the end consumers who need to use them.
Each market has its own nuance that now needs to be leveraged. The other thing in my mind is that these are demand-driven markets. So if you're going to make any penetration, you need to impact what the consumer experience is going to be, but to ensure that the rest of the ecosystem that you're influencing in a way that makes sense for them commercially. So if you look at the Kenyan marketplace, actually there's a convergence of several strategic policy plays that are creating an extremely enabling environment beyond the successes that we've seen. The government has a very strong cashless / cash light agenda that has been stipulated, and we can already begin to see its impact rolling out.
According to industry experts, mobile operators in the region, together with financial institutions, are key to deepening financial inclusion.
In the beginning, I think one of the biggest opponents to M-Pesa, for example, was coming from the banking sector. And I think that was before banks realized that this is a platform that can be leveraged upon by the two parties to achieve the objectives. Yes. So as Chidi mentioned, banks are leveraging on this to be able to access the huge client base that the MNOs have. And on the other hand, the MNOs are leveraging on this to be able to provide financial services. So it's a win-win situation. And I think when banks came to realize that and joined on, that convergence has really worked well for both parties.
As people progress along the economic ladder, their financial needs also evolve. So when I've nurtured someone to transact with mobile money and I've gotten him to save and borrow with mobile, then after 2-3 years, I can get him to start buying shares with the mobile, via mobile money as well, and buy insurance, savings products as well with mobile money. So it will evolve over time, and as we are evolving as operators, our regulators will also evolve because remember, it's a partnership, it's a collaboration. And again, we are guinea pigs, so both on the regulatory side and as operators. But I think so far we've done it reasonably well. And we like what we see, and I don't foresee challenges.